The Reserve Bank of India has cut the repo rate by 25 basis points to bring it down to 6%. This has marked Governor Sanjay Malhotra's second consecutive rate cut since taking charge in December last year. The RBI has also shifted its stance to accommodate and has lowered the cash reserve ratio to inject more liquidity, that is. Now, the move has come amid global tension after the US slapped reciprocal tariffs on foreign imports. I'll leave you with the same. Thank you for watching.
The direction of the policy repo rate is downwards. Where it will reach, Lata of course asked that question. We really don't know. I'm Sanjay, but I'm not Sanjay of Mahabharat to be able to foresee that far. I do not have that that divine vision that he had. But we will jointly try to manage the growth and the inflation dynamic in our country.
RBI Governor Sanjay Malhotra made this remark on Wednesday during a media briefing after the Reserve Bank of India reduced the repo rate by 25 basis points, bringing it down to 6%. This marked his second consecutive rate cut since taking charge. The decision followed a three-day Monetary Policy Committee meeting that began on Tuesday. Experts view the move as a step to support the Indian economy amid global uncertainty, especially after the US imposed a 26% tariff on Indian imports.
As they have increased the tariff rate significantly, that will increase the prices of our products in the international market and the competitiveness in the international market. So when the cost of capital comes down because of the lower repo rate, in that case, your cost of production also becomes lower. So your product also becomes competitive in the international markets. That's why this is going to benefit the producers in the global market as well as in the domestic market to create the level playing field.
It's not only tariffs imposed on India, but the tariff war which is happening globally. Because globally now it's a US-China trade war. This US-China trade war is going to impact India negatively. So now, since demand and consumption is going to get boosted because of this rate cut, so it would sort of offset, up to a certain extent, offset the losses or negativity because of the tariff war. So I think it's a good step. That's why I'm saying it would partially offset the negatives or the losses because of the tariff war or the trade war which is happening.
The RBI has also shifted its monetary policy stance from neutral to accommodative, leaving room for further rate cuts. Additionally, the central bank reduced the cash reserve ratio or CRR to inject more liquidity into the economy and improve transmission of the rate cut. Lower interest rates are expected to reduce the costs of capital, bringing down production costs and boosting the competitiveness of Indian exports.
The recent trade tariff-related measures have exacerbated uncertainties, clouding the economic outlook across regions, posing new headwinds for global growth and inflation. Amidst this turbulence, the US dollar has weakened appreciably, bond yields have softened significantly, equity markets are correcting, and crude oil prices have fallen to their lowest in over 3 years. In fact, as we speak, it is about $60 to a barrel. Under these circumstances, central banks are navigating cautiously with signs of policy divergence across jurisdictions, each reflecting their own domestic priorities.
The RBI has lowered India's growth forecast to 6.5%, down from its earlier estimate of 6.7%. It has also revised the inflation outlook from 4.2% to 4%, offering some relief to manufacturers and exporters.